Advanced estimate for Q1 GDP came out as 1% only. The Fed estimate was about 2%, and that's a clear sign of a slowdown happening in the economy. While both the PCE and CPI inflation metrics came out even lower than estimates, showing headline inflation as low as May 2021. But the core portion of these metrics refused to budge, mainly due to wage inflation. The bad news is that further action is needed to add more pressure on the core inflation. The good news, however, that's exactly what the Fed did when they announced another 25 basis point hike, bringing the federal fund to almost 5.25. Despite the ongoing debt ceiling debate, Treasury yield continued to offer around 5% yield on the money market side. However, climbing demand for the longer-term Treasury, that's the capital market, pushed the yield below 3.5 for the 10-year maturity. Another major event in April is Q1 earnings season. Now, despite the headlines regarding banks that we saw, major US banks reported positive quarter-over-quarter earnings, especially JP Morgan, that announced higher earnings per share from previous quarter and even from previous year. Smaller banks, however, seem to be more affected overall with shrinking earnings. Major airlines also had a negative earnings, except for Delta Airlines so far. Overall, real estate and communication services sectors overperformed the S&P 500 index for the month, while industrials and materials trailed behind. Communication services and tech sectors, however, they doubled the S&P for the year, while financials, energy, healthcare, and utilities are still trailing the index. That said, within the index itself, there is the home building industry portion. That one has been overperforming even the Nasdaq itself.